Brought to you by Standard Bank, the bank for entrepreneurs.
There's a common misunderstanding with regards to fidelity and theft cover. Fidelity really refers to a fraudulent activity by staff or in collusion with third parties, and theft is by unknown third parties. So they're not the same cover, and when a business decides to purchase theft cover, which is typical in terms of the covers they do purchase, they often forget about the staff component. So it's advisable at a point in time to actually take stock and say, well, are we requiring an element of fidelity cover, especially with attractive goods where it may be easy to move those goods without much attention in the market, for example, consumables. The biggest problems that we tend to find with fraud and theft is always has a trigger, which is external, a broken window, violent entry, which is really forcible, where there's evidence that a third party has entered the premises, often outside business hours. The fidelity element, which relates to employee theft, could happen under the owner's eyes, and what that refers to is especially an example for foodstuffs where they are manufacturing food, or a franchise where there's a lot of food handling. Quite often you find that non-spoiled product goes out the back door in terms of trash and that type of thing. So what they need to do is look at their controls, simple solutions as to having a camera, and it could be a live or static camera where it is watching the distribution area, garbage disposal in respect of foodstuffs, spoilage, is the stock being spoiled, and then also the cash control. Are all those sales being billed and rung up at the till? Are there cash dealings, and is every cash dealing run through the till environment?
Brought to you by Standard Bank, the bank for entrepreneurs. Standard Bank. Moving forward.